Welcome, guys, to part two of ways to make money in stock. So, we saw appreciation is number one. Let's go see number two is dividend. Dividend is a periodic distribution of profit by a company, usually quarterly. So, every 3 months, the company pay you, they share the profit because you are one of the owners. So the expectation is that you and I, when our expectation should be the company is doing well. That's why we analyze the company, we do the technical analysis, we have risk in place, right? So we can have that cash flow. So one of the class we will have is the cash flow to see how to do the strategy to be able to make money every 3 months and then while also have appreciation. The first one is appreciation, second dividend. The company is doing well, it pays some of the profit to the owners as dividend. Understand that how important that is because as investors, once we see we are profitable, things are doing well. One of the company that I invest in is a New York Mortgage Trust Company. I buy about 5,000 stock, and that was last year, and the price were about $1.25 and the midst of a crisis. So when there's a crisis, guys, this is educate yourself. This is why this class is important. You learn those principles, and then you will apply them. So I buy it at 125 a share, and then it cost me about $6,250 to acquire 5,000 of that stock. It's a small cap company, a small mortgage company, but they are doing well. I look at the last 5 years; they have great financials, and I was like, that's a no-brainer. And then I can make my money quickly. Okay, so they pay 20 cents dividend. 20 cents doesn't seem a lot because you can find 20 cents on the ground. Okay. So now the total income per quarter that this company is bringing me at 20 cents, I got 5,000 of them. When you do the math, you can see 5,000 times 20 cents is $1,000 per quarter. So where can you invest 5,000, $6,250, and every 3 months they offer you $1,000? That should be part of your portfolio of businesses, part of what you do. That's why stock is important as well. If you have real estate, if you have businesses, you can add stock as part of your portfolio or 10% of your portfolio, which is fine. So don't take this lightly, your education, because it can change your life. Okay. The last way, the third way of making money is option trading. Okay. The option is what the way I explained it. If you buy one option contract, it grants you the right, but not the obligation to buy or sell an underlying asset, okay, at a set price on or before a certain date. So what you're doing with option, you buying a contract. You might pay $2 per contract, even though the price of the asset, the price of the stock might be $50. So you can buy 100 contract on it. You set the price. You said, I'm gonna buy this for $2 at $50. So your price is set. You have the right to either buy the 100 share at $100, no matter what the price is. If the price is 200, you will buy it at 100. Okay. But what if it goes down? You will buy it. You have the choice to buy it at $90 if it goes to 90. But if it goes to 200, you still got the choice to buy it at 100. You have the obligation to buy or sell an underlying asset at a set price before a time. There's a time frame to this. Your contract has a time limit. Okay. The more you get closer to the time limit, the less your option is worth. So you need to, this is an introduction. This is basically a quick way to make money. But if you're gonna do options, because you can lose a lot of money because you're borrowing, you do it on margin. Okay, you don't need to have if you buy 100 share of a company at $50, you don't need it's $5,000. But when you use options, you only buy it for $2, 100 share for $2. Okay, that's $200. So you only need $200 to buy the options, the contract. I mean, if you buy the contract and you have, because you have the right, if you exercise the contract, that's mean you buy it and pay the middleman, and then you keep your profit. But if it goes down the other way, you will receive a margin call saying you need to bring money in. So with this, or you can lose the price you pay for the contract. Okay, you don't have to exercise it. You just pay whatever the $200. Okay, that's a great option as well for ways to make money in stock. So a call options give you the holder the right to buy a stock. That's a call option. Okay, you do one call options, one contract. It's a call options. Okay, you say I'm gonna buy this thing for $100, and I can buy it at any other time. You set your price at 100. If it get to 200, then you sell it. You right? You buy it and then you pay the money back at 100, and then you keep the balance. Okay, the put options give you the right to sell the stock. Okay, so let's say you do it now at $100. So because you have the right to sell it, it goes down to what, $50. So you can see that you can make a profit. So what we are saying, options is a way, but you need to educate yourself on option before you put your money in there, because you can lose a lot of money quickly in option, because it's the option does come with a time limit. So far, we cover three ways to make money in stock: appreciation, dividend, and options. So I will see you next time, where we're gonna see what can happen to your investment. See you in the next lecture.